How does OPEC influence geopolitical oil conflicts? Imagine a group of countries controlling a large part of the world's oil supply. That's what the Organization of the Petroleum Exporting Countries does. Their decisions can shape global events in surprising ways. When OPEC sets how much oil its members produce, it directly impacts the supply available worldwide. If they cut back on production, oil prices tend to rise. If they increase output, prices can fall. These choices are not just about economics but also about politics and power. In regions where conflicts are brewing or ongoing, OPEC's actions can make things more tense or help calm the waters. For example, if a country like Iran faces sanctions that limit its oil exports, OPEC might decide to reduce overall production to keep prices stable. This can help or hurt different countries depending on their role in the conflict. When Libya faces unrest, its oil output drops unexpectedly, forcing OPEC to adjust its plans. Such disruptions can make conflicts more intense as countries scramble to secure their share of the market. Saudi Arabia, the largest producer in OPEC, often plays a key role. Its decisions can signal support or opposition to political movements in the Middle East. For instance, if Saudi Arabia chooses to increase production, it can lower prices and weaken rival countries like Iran. Conversely, if it cuts back, prices go up, which can strain countries that relying heavily on oil revenues. These moves can influence regional conflicts by shifting economic and political power. OPEC's influence extends beyond just prices. When oil prices spike due to conflicts or supply cuts, economies that depend on importing oil face inflation and economic instability. This can lead to protests or political changes. On the other hand, if OPEC boosts production to ease prices, it can reduce these tensions and stabilize markets. During conflicts in the Middle East, OPEC sometimes steps in to increase supply and help prevent prices from skyrocketing. For investors in energy commodities, understanding how OPEC reacts to geopolitical conflicts is vital. Their decisions often cause sudden price swings. Monitoring OPEC's meetings, statements, and the political climate in member countries helps predict market moves. When tensions rise in oil-producing regions, prices tend to become more volatile. These shifts can create opportunities or risks for those investing in oil and related energy commodities. Geopolitical tensions also cause uncertainty about future supply and demand. While speculation can influence prices, the main driver remains OPEC's actions combined with regional conflicts. If OPEC decides to cut or increase production, it can quickly change the market outlook. This makes it essential for investors to stay alert to political developments and OPEC's policies. In short, OPEC influences geopolitical oil conflicts by controlling how much oil is available on the global market. Its decisions can either ease or intensify tensions depending on how they manage supply. These choices impact prices, economies, and political stability worldwide. For anyone involved in energy investments, keeping a close eye on OPEC's moves and regional conflicts is key to understanding market shifts and making smarter decisions.